Is it over for bonds? Are small caps headed off a cliff? Is gold going to finally enter a bull market? And is the dollar dead? All that and more on Sunday Night Charts. We take a look at charts to help you with a trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me. As the colors on your screen, the moving averages, 21 days red, 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is a general direction. Prices are heading. Momentum is a rate of change. A bullish indicator for both is positive, and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempt to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Keep in mind, technical analysis does not predict prices. It can be used to determine the risk of a trade, help with timing trade, and provide direction of the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. And we've got some updates in today's show. We're making some tweaks. I hope you enjoyed them. Let's kick off with the S&P 500 as we like to look at the percentage of S&P 500 stocks above their 50-day moving average. We notice that they are coming down. And remember, when a stock or an indice crosses its 50-day moving average to the downside and reconfirms that move, what it suggests is it's headed lower, that momentum is turning down. What we see now is 60% of the S&P is over its 50-day moving average, and we can see that breadth, which this is referred to, is headed lower, which will eventually drag the major indice down. As we look at the percentage of S&P 500 stocks above their 200-day moving average, you can see it rolling over, that it started to break up to 75%, is now coming down, again suggesting that the broad indice is headed lower, because when you get below the 200-day moving average, well, that suggests your stock is in a bear market. And right now, 30% of the S&P 500 is in a bear market. And so that sort of makes sense as we move in here and we see that under the price is now below the 21-day moving average as it heads lower, or has been below the 21-day moving average. The 21-day is now turning lower. Price is headed lower on it. And you'll notice it's still above all its 1, 3, 6, 9, 12-month support levels. So on a momentum basis, it's still up, which is good because that means a lot of algorithms hang on to their positions when momentum is strong. But look at the chart, and what do you notice first standing right out? We see the supply zone. It broke up there, which means you have a bull trap as it got rejected. And now notice where the 6-month volume profile lines has jumped up to. It was down here before. It's now up here, telling you that this sell zone is exactly where sellers are at. Now you'll notice the price has been tapping its 100-day moving average. It's below the 50-day, which hasn't been an issue. It's come below the 15-day, which has not been a problem. It's come against it's hitting the 100-day and fighting back. So what is it telling you? Well, you look at where the volume profile is, and you can see tag the 100-day, tag the 100-day, tag the 100-day just above that. So where is the likely direction for price given all of this heavy selling up here? It's a bit lower, should come down probably to find this little support zone here to see if buyers are still there. Major support remains around the 440 level for symbol SPY. Let's go on to the NASDAQ. Or let's stop real quick with Momentum Timer Pro. Keep in mind it's still free, and there are rumors that there will be a video guide to how you read all these signals coming, hopefully for you, in the Tuesday report. I'll put a link up above to your right, and there's a link in the description below. Again, if you want to sign up for it, it's still free, but we just see a slight move down in the 1 month signal. Otherwise, it's holding a mid-size, max size, or mid-size position. Depending on if you're a 1 month, 3 month, or 6 month trader, it's still telling you that the momentum is strong for SPY. Let's head on to the NASDAQ 100, symbol QQQ, and we notice breadth is a much different situation because now only 33% of the NASDAQ is above its 50-day moving average, telling you that 67% of the index is headed with down as momentum is breaking lower. So this is very weak for the NASDAQ. Every time it's gotten down here, it's had a short-term bounce. So it's sitting at a -2 standard deviation on a 1-year chart. So look for buyers to come back and attempt to buy this, but it's very weak. Now you look at the percentage of NASDAQ stocks above their 200-day moving average. Again, when you're below it, you're in a bear market. So that's 45% of the index is in a bear market, meaning those who are in the NASDAQ are holding on to some small concentrated positions that are up. And as those find weakness and fall below their 200-day moving average, the whole index comes down. So you'll notice that every time it's gotten down here, you see buyers here, you'll see buyers here, buyers here. So what do you think is likely to happen? Well, buyers, but notice from a technical position, if these buyers get flushed out as price goes lower, well, that's what you're looking for when you do technical analysis. So let's take a look at the price. We see the 50-day moving average turning lower now, below all the key moves, still below all the key moving averages. It's broken its 1 month support. So when you start looking at algorithms that are trading these shorter term signals, well, they're going to start looking to exit or reduce long positions, which is how you read that and interpret that. Let's go on to QQQ. And what do you see here? You notice that 6-month volume profile. This is the first thing you see here. And what happened? It came down and tagged it. So if you're not sure if your supply zones are right, there's an easy way to find out if a buy zone is a buy zone. When price gets down there, do people do what they did before? In this case, which is buy. And the answer is they did. They bought. It came back up right into this little chunk of volume here, found some sellers, got into this volume zone here, is trying to find some buyers. Otherwise, the path of least resistance for the NASDAQ is back to that 6-month volume profile to look for more buyers, because there weren't that many of them to take this higher. You'll notice we have now a cross of the 50-day. It's rolling over and headed lower. It's crossed the 21-day, kind of a soft rejection at the 21-day. Again, price for the NASDAQ likely lower to go find some more buyers. Now, as far as Momentum Timer Pro goes, kind of a similar story. As the S&P 500, we see now the 1 month position going to none as short-term signals are backing out. It's still holding mid-sized positions. And if you look at the chart, that makes sense that it would, because those haven't broken down just yet. But hang tight. If price keeps going down, those two will break. Let's head over to the Russell 2000. Take a look at small caps. Well, the situation is about as pretty as it is on the NASDAQ 100. Only 39% of the Russell 2000 is sitting above its 50-day moving average. So momentum is very bearish for small caps. And of course, the chart for small caps is ugly. Let's look at the percentage of Russell 2000 above their 200-day moving average. It's 44%, telling us that 55% of small caps are in bear markets. I mean, that's a lot. So if there's any sort of move down, this thing can fall apart real quickly. And we look at the charts and we see a lot of validation in that. And notice now that 1 month support, 3 months, and 6 months have all broken. And what does that tell you? That these algorithms that look at those signals and those windows, and if you're a technical trader and you look at 6 month windows, well, I just told you it broke. You don't even have to go look at the chart. You'll already know that, hey, this thing's breaking down, and anyone who's been buying in the past 6 months should start looking at their positions and perhaps sell. 100-day moving average price is turning negative. 21-day, though, turning back up. Let's take a look at the charts to find out what we can see. And boy, we're going to go back out to a 1-year chart, because this is a story. Everybody thought this was a long consolidation pattern that would lead higher. I thought this was a long consolidation pattern that would lead to lower prices, and you can see that it came down into this buy zone and it found buyers, and it went up, got rejected. The 21-day moving average came down, found some buyers. Now, this in the hand of the buyers to try to take this higher. The only question is there much buying strength? When you start understanding technical analysis, when it breaks below, let's say this lower purple line, which is seen at 208, which suggests is everyone that's bought at all these dips in here, when they start seeing a minus sign on their statements, they become sellers, and that is what drives prices lower. If we look at a 6-month basis, you can see the price is now lower than it was 6 months ago, and that means everyone that's been buying in here is having perhaps second thoughts about their positions. That's what those indicators are telling us. You see the volume profile dead in the middle there, where the sellers are dominating. Above that, a lot of weakness here for IWM. And with no surprise, Momentum Timer Pro is telling you, look, if you're in this thing, you're only in it on the 3-month window, and don't be too confident, because it's saying if you want to be in it, don't take a lot of risk here. It's out on the 1 and 6 month positions. So let's go on to the energy sector, and look what I was able to find for you. We're cutting out some positions that are not as popular to add a little more information on the more popular positions. And check this out. The percentage of XLE stocks above their 50-day moving average is 100%. And I want to point out that every time it's got to 100% in breadth, you notice you see about a peak in the stock price. You see above the 100% above, you see, or very close to it, you start to see a peak in price. Here you see it gets up here, peak in price. And guess what this probably suggests? A peak in price is coming for XLE. So if you like the opposite end of that or something that trades opposite that, then you're very interested in taking a look at those positions. How about price? Still bullish. Momentum flipping bullish on the 21-day and 100 as price accelerates higher. Otherwise, all these screens are green, which would make sense because, well, price is up. Let's take a look at XLE, and then we'll look at crude. We can see XLE looked like it was going to break lower. It was making this nice rounding top. Found some buyers at 200, and boy, it just shot through here. All these sellers just recanted, and boy, this thing went straight up. Let's zoom out to a 5-year chart because now it's coming up into this 5-year volume profile window. You see here's the 5-year mark, but it's starting to pick up into that volume where guess what happened 5 years ago? Sellers, 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 sellers. The question is, do the same people that sold back then still want to sell? Maybe they do. Maybe they have more to sell. That is the question for sure. Let's take a look at crude because crude paints a little bit different picture, telling us that perhaps those energy stocks are far ahead of themselves. And what do we talk about with crude? That when it was down in here that, hey, this thing could make an easy run up to 80. It was holding the 200-day moving average. And sure enough, what did it do? It held that volume profile line and it shot up to 80 and then got into 85, and it's now at the peak of this supply zone. And guess what's been here before? Sellers, sellers. So what is the likely probability that you should see early into next week when you're in a sell zone? Well, you should see sellers try to defend their positions, because if they don't, then that means you have a potential price breakout. And so far, we have to assume that the sellers are going to try to defend it. You can see clearly where the buyers are at, now where the sellers are at. The only question is, do the sellers show up? All right, let's go on to the financials. And guess what we got for you here? Same story. We got the percentage of oops, I should say XLE. I should say XLF. Boy, I goofed that one up. Well, we'll move on, and I'll fix that for next week. Let's look at financials here. Price is bullish. In case you're wondering if this is recorded live without editing, it is. It is for sure. Momentum on the 21-day moving average is turned bullish. Otherwise, nothing changing here. And we would expect to see financial stocks go up because bond prices go down. They don't trade perfectly inverse of each other, but they trade fairly inverse of each other. And you can see it came down, tagged the 200-day moving average, just like crude, and just went and hauled straight up vertical, breaking out to new all-time highs. At least I believe that is. Yes, indeed. New all-time highs as everyone's bullish on the banks lending when people actually have less money. And then we see a gap down Thursday. Friday, buyers come into the supply zone. The banks, as they report earnings, should be able to start buying their stock back soon, which I know a lot of people are eager for them to do to hold prices up there. Let's go on to gold miners, GDX. All right, we've got 21-day moving average turning higher, 3-month momentum breaking now. So that means momentum signals on a 3-month window are negative. 6 months has broken, but it's fighting back. It's starting to pull back up, but it still remains broken to the downside. Let's take a look at GDX to see if there's any hope here for mining stocks. And what do you see? They came up to their 50-day moving average, to the 100-day moving average, and then got rejected, came down. And this is difficult because a 6-month volume profile line continues to be resistance. Every time it breaks through there, sellers let it go and then sell it back. So sellers keep coming in and pushing this thing down, and the trend is not good. I mean, you're seeing lower highs, lower highs, lower highs, and eventually a breakdown as the buyers just say, hey, I'm not making money here. I'm going to throw in the towel. And that's what the sellers are looking for, is to drive this thing lower. So you have to look at this and say, well, if you're bullish on GDX, well, you probably shouldn't be. Maybe gold will give you some hope when we get there. But no, that's not a pretty picture. How about emerging markets? 21-day moving average turning up. It's above now all the way through the 50-day moving average. 1-month momentum has turned back positive. 9 and 12-month momentum, which are negative, are fighting back higher. The key ones being the 3 and the 6. So 6 months still moving higher, but the flip on the 9 and the 12. Let's go and take a look at what we see on EEM. There it is. All right, look, and that interesting, came out, tagged the 6-month volume profile and got rejected. So what did the buyers do? The buyers came in and they said, look, we think there's a low. We're going to buy. And the seller said, bring it. And as soon as it hit that volume profile line, guess what? The sellers were waiting for them, And now there is a volume profile line higher on the 1-year chart, but notice how it tagged that 100-day moving average across the 100-day. It's been confirming to the bottom side, bottom side, bottom side, bottom side. What does that tell you for EEM? Bearish. What does it tell you for mining stocks? Bearish. So EEM confirming that perhaps GDX not heading a whole lot higher if it tries to. How about high yield bonds? Oof, a lot of red here, and this is bad news for the broad equity market. When high yield bonds break down, well, the rest of the market goes with it. Not much to talk about there, other than let's go take a look at the chart for HYG. And there's my bond chart. And let's zoom out to the 2-year chart, because you'll notice it's coming down here and finding support. So let's go ahead and draw a line in, and let's use this price level line, and we'll come in and say, all right, there is your level of the volume profile line. This is now what's called support. This is where buyers are at. Now, how do you know where the low end of support is? Well, look at where your chunk of volume is down there. And whoops, let's say right about here. And this should give you some help. You want to kind of grab the upper and lower end of that volume profile box, and it's probably right about there. And that, my friends, is where your, let's get the arrow back, supply zone is at. So it comes down here, hits the supply zone where buyers are at, comes down, hits supply zone where buyers are at, and now price is rolling over and heading down. If it breaks below there, well, there's not a lot of buyers left. Let's zoom back into the 1 year. You can see very clearly following the 50-day moving average down, following the 100-day moving average down. There's your 1-year volume profile line. There's your 6-month profile line. Not good for high yield bonds, not good for the broad equity market. So if you're long the equity market, watch the high yield bond market. TLT going all red just about. Only bullish on the 50 and 100-day momentums. Is Bond King finally over with? Is it finally his day that he thinks is coming? Never going to happen. 3-month momentum breaks. So what happens now when you see all this red, well, except we're not seeing it on the 9-month, what it's telling you is all these algorithms and technical traders that are looking at different windows and adjusting their positions are selling. So the question is, why is it when these things turn all red that a bottom is coming? Well, because you're looking now for where price stops. So let's take a look at TLT, because from a monetary perspective, this thing's not dead at all. But from a price perspective, everyone's going to assume that. So let's zoom out, and I adjusted these lines over the weekend, and so you can see where these volume chunks are. And there's a big zone right here at 149, huge zone. In fact, there's a midpoint where the volume profile line is, and then you have this huge amount of volume on both sides of it, where sellers and buyers have been duking it out. Sellers drove through there. So you can see sellers drove through these two supply zones. They gap through. And when you see that, these big moves, well, that's because there's not a lot of buyers in there before, so price tends to move quickly through it. So it moved quickly through it to the downside, started to pick up some volume. Sellers drove it down. Buyers said no chance, and sellers are trying to drive it down and break that. If they do, if they're able to push this a little bit lower, well, there's a ton of volume support here below. And how do we know? Because we can go to the 2-year, well, the 2-year chart jumped too. How about the 5-year? Is it way below? Yep, 5 years way below. The 1-year chart was right down here, but there is plenty of volume here to hold that because there's a lot of former buyers there. But from a momentum standpoint, you have to say it's bearish across the 50-day. It just hasn't found much, but it's trying to find support here. Remember, the banks bought a ton of bonds last week. So why everyone's selling, and this man presented right here, a little over $1 billion selling this ETF. Well, the question is how many sellers are indeed left, and perhaps maybe not that many. All right, let's go on to Momentum Timer Pro, of course, as we expect, saying no position if you're following it as your guide. All right, on to gold. Is gold finally out to hit a bull market? Well, look, price has gone bullish. Momentum's bullish above all the key moving averages. 6-month momentum is fighting back higher. I mean, this is what you want to see after it got beaten up so bad. How about gold above the 6-month volume profile? But note, every time gold gets to 1830, what happens? Yeah, it gets sold, right? Every time it gets to 1830. So very clearly we know the buyers are below 1790, the sellers are above 1790, and let's keep zooming out. This volume profile line, I mean, all the way to the 2-year mark, I mean, it's pretty sold. There's no question where the buyers and sellers are at. The only question is, can the buyers get above 1830? That's the question. So far they haven't, because every time they get there, well, they get met with sellers. So I'll say good luck until that gets through there. You just have a no man's zone on that. How about silver? Now getting maybe some little positive action here, moving above the 9 and 21 day moving averages, but 3-month momentum has broken, so that's broken support. 6-month momentum is fighting itself back higher. How about we take a look at where silver is, and what do you see? Did it shoot higher like everyone was hoping? And I did the show on, say, hey, look, it double bottom. Well, it double bottomed right into the bottom of the 100-day moving average and got rejected. Came back down. Buyers once again said, "This is it, man. We got another chance to buy here," and they did. It smacked right into the bottom side of the 100-day moving average and got rejected. Bearish trend for silver for sure. When you're following the moving averages down and you're hitting the bottom side of it, it is absolutely bearish. And of course, it's also hitting that with the 50-day moving average. 6-month volume profile, right where we'd expect to see it. Buyers clearly dominate under 22.49. Sellers, well, everywhere above that. So the picture for silver still remains bearish unless those bulls can break through there. How about the dollar? Is it dead? Well, momentum on as bearish, and on the 21 days, this is price. It's now below the 50-day moving average, getting a lot of people excited, at least from a price perspective, but not from a monetary perspective. The dollar's not dead from a monetary perspective at all. Now, remember, we talked about how this could come down and hit the 100-day moving average and bounce. Well, how did we know that? Well, it's simple. If you take a look at the volume profile, you have to go to UUP. And guess what? There was this little gap here, and you can see price just gapped down because there's no buyers or sellers there. So it jumped down, and guess what? It started to get into this chunk of volume here where buyers were previously at. You can see they were right there, and well, it found support and moved higher. So sellers are right here, this 25.73, which matches up to about 96, 96.2. So if the buyers can come back and break through those sellers, that goes higher. But so far, holding the 100-day moving average, the 100-day hasn't really been a sign of technical support. It hasn't been following that as much as following the 50-day higher. But if it could hold the 100 and get back up there and flush out those shorts, well, then the dollar will eventually get up to break through this 97 and into 100, and boy, the wheels of the market will come off. So with that, I'm Steve Van Metre. Thanks for joining me. We'll see you soon. Bye now. The content of this video is provided as educational information. It's not intended to provide investment or other advice. It doesn't be construed as recommendation or solicitation by selling securities, financial instrument, or participate in any particular trade strategy. This video was prepared by Steve Van Metre, personal capacity. Business expressed in this video that do not affect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.